Alright, good afternoon everyone. Welcome back to the channel. My name is Osei and I am one of your senior economics tutors. Today we're just going to be going over a couple of questions that our junior tutors have answered, and I'm just going to be walking you through their thought process. A little bit about myself is I actually have a bachelor's degree in economics, and I work for one of the big 5 banks in Canada. In addition, if you have any questions that need any help with some economics homework, please feel free to visit the link below in our description and submit your questions, ask the questions you need, and we should be able to help you. With that being said, let's get started. So let's see if this is working perfectly. It is. Cool. Question number 1. Explain economic cost and economic profit. And let's see what our junior tutor said. The economic cost is the cost of choosing one action over another, also known as opportunity cost. An economic cost is the value of the next best economic activity you give up by choosing to engage in a particular economic activity, such as buying goods or services or starting a business. A classic example of economics is guns and butter, defense spending versus social spending. In order to produce a certain number of guns, you have to give up producing a certain amount of butter, which is the opportunity cost of producing guns. Keep in mind that the economic costs are different from accounting costs, and they include not just monetary value you give up, but other value you give up as well, such as satisfaction and pleasure, aka known as utility or benefit. Economic profit is the difference between total revenue received by the business total implicit and explicit cost of a firm. It is often the extra profit left over after considering the next best alternative investment, and can be either positive or negative. So it's a complete answer. It's a great answer. So first things first, we need to note that economic cost is equal to opportunity cost, and is equal to opportunity cost. So basically, if you could define what opportunity cost is, then you're basically defining what economic cost is. And like our tutor says here, this is the value of the next best economic activity you give up by choosing to engage in another economic activity. Another key thing it does say is that, yeah, this looks at the value, but our tutor also says it's not just the monetary value, but it's the other value that you give up as well, which is the satisfaction and pleasure you gain from doing the other economic activity. And part 2 of this question is economic profit. Which is equals total revenue minus explicit costs and implicit costs. So normally this would just be accounting profit. Which tells us total revenue minus explicit costs. Now the reason it becomes economic profit is because of this right here, the implicit cost. And another word for implicit cost is also opportunity cost. So your implicit costs are the same thing as your opportunity cost. So this is a great explanation, and it's a correct answer. one thing I will add is that it can be positive or negative. Obviously, if it's positive, it's an economic profit, and if it's negative, it's an economic loss. That being said, mathematically, it is possible to have an accounting profit but have an economic loss.